August the 24th, 2011. Let's take a look at Bank of America because I think this is a very serious subject. I normally talk about silver, but the odd time I'll talk about something else. Here I'm going to talk about the logarithmic monthly chart of BAC. This chart contains 83 months and 100 periods worth of data going back to before 2004. And over the last month, we are now down around 30%, and this is the worst month since the bottom in 2009, and the most volatile move, at least since somewhere in here. So things are really starting to pick up, and we're down 11% the previous month, 55% over 20 months, and over 100 months down 81%. Those are some massive numbers. And we're in a situation where we're in a banking crisis, a debt crisis. The chances of a dollar collapse are about 100% right now. So, what's the chances that Bank of America is going to survive? Most likely not too well. And in a situation where you have such a thing, I was stating before with stocks that the companies that can make it may be able to still be revalued and still possibly having great equity return profits within the cash out of a new system, whether it be some sort of currency or whether it be gold, silver, etc. However, the companies that don't survive, regardless of deflation or inflation, are just going to go first, especially through a deflationary cycle. And this may be sparking that major deflationary spark people have been talking about. After all, we are in a situation where we come down in here, these bands get expanded. That's because of massive volatility. We were very tightly within this. Boom, we expanded with this massive volatility, really extending this lower band down quite significantly. Got above this 38.2 level and then to this market here. The significant thing about any move is if it holds the 61.8% in an opposite manner. An opposite of down is higher. So therefore, if it holds this level, then that means it's still successful or that of a non failure. The move from 55 down to $2.50 has yet to fail. So if that's the case, we could very easily undercut the previous lows. This support level did not hold. That was a significant level. That stops any bullish action within what's happened. It makes this last run neutral and it makes the entire run bearish as long as you're below this level of $8.21, and currently we are. Okay, now as far as targets are concerned, one of my favorite things I like doing is Fibonacci upside. And obviously, we're going to have to do downside in this case. But how the upside works is that you take the highest point and you subtract the lowest point. You multiply the fib percent and you add the low. Plain and simple. Okay, so we have a situation here. We see a low of 253 and a high of 5508. Because we're doing the opposite of Fibonacci upside, we're going to have to do everything on a negative level. So instead of taking high, we're going to take low and merely do 1 divided by 2.53 to get the reverse number, which turns out to about 39%. We'll subtract it by the low, which is now 1 divided by 55.8. And that gives us a number of 0.3777. So we need to multiply this by the fib percent, which is, of the first case, 1.618. And we have to add the low. And once again, that's going to be 1 divided by 5508. That gives us 0.62, but we need the opposite of this as well. That's $1.59. That's the next price level breaking down below 267. Using the 261%, that would bring us down to 99 cents or 99.5, and you can just say a dollar. $1.60 and a dollar. Those are some even numbers, basically. And now you got to think to yourself, well, what's the chances this happens? And do your research for yourself. Just don't go with what I say. Look at many different factors. I use a methodology of the mathematics within the stock charts, as well, of course, as the fundamentals to how currency is created, as well as the psychology on the natural law of action reaction and what the cause and effect is going to be with people waking up to how currency is created and how debt is guaranteed, all that type of stuff. Ron Paul getting noticed, all this, it's just inevitable in my opinion. And when I look around and I see banks in itself, your everyday banks having being fairly busy with regular normal hours and normal activity, what's going to happen when things don't become normal? We've seen in normal activity what happened with this volatility in here. So if we have triple, quadruple, 5 times the amount of people asking for their fiat cash at one time, what's going to happen, especially within a fractional reserve banking system? A lot of people are waking up to the frauds and the Ponzi scheme within it. And what's the action going to be from that? And I think the easiest answer is yes, of course, the system really falling apart, but to what degree it's going to be massive, of course. They might come out and say, well, we're going to put QE3 in, and we have these massive trillions and trillions of dollar bailouts and stuff, and what's the reaction going to be from that? Most likely higher gold and silver prices, and maybe we might get a little pop of a rally. For example, maybe we come back down to this level here, and then, okay, here we got QE3. Okay, the news brings us back higher, but boom. And now we do play and test that 159 level, and maybe 159 is not support. And if that's the case, we're going to 99 cents, because when you find an area that's supposed to be something and isn't, you're going to the next one fairly fast. Meaning, if we don't find much support here and we keep going, we're going back down here fairly fast. Of course, if you're doing any type of trading, always adjust to what the message of the market states, because that will consistently change. But currently, on a long-term level, it's not looking good. Because one thing that I was noticing with the stock market is you have the big move lower in August, early August, late July, and normally this is vacation period, and after Labor Day is when things really pick up. So is that going to happen again? Lower moves that things really pick up on post Labor Day, because only things are big and small in relevance to something else. Therefore, the move here in relevance, yes, is bigger to here, and same within the stock market. But if we have moves bigger than what we see in August, instead of having 1,500 point down weeks, we have 4,000 point down weeks, or whatever, something bigger, then that will be the case. The moves that we currently have are relatively small to the future ones. An example, again, is losing 30% in 1 month compared to 60% in 1 month. The 60% down month is bigger than the 30. Again, I don't know what the exact answers are, but I know by looking at this that it's not looking too good. We are currently short term now at this band, but we were here too. So I'd like to thank you for tuning in, and take care.